Bitcoin has shattered its previous record, soaring to an unprecedented $93,000. The cryptocurrency's value has skyrocketed since Donald Trump's election victory, showcasing its remarkable momentum. Bitcoin's meteoric rise is truly extraordinary. The potential for astronomical returns is clear. A mere $100 investment in Bitcoin back in 2010 would have transformed into millions today. However, it's crucial to recognize the inherent volatility. Overnight losses of 50% are not uncommon in this dynamic market. So what makes digital currencies so captivating to millions worldwide? Are they truly revolutionizing finance, or are we witnessing another speculative bubble? Today, we're diving deep into the exhilarating world of cryptocurrencies, examining their potential to reshape the future of money and challenging the notion that this is merely a passing trend. To understand where we're headed, let's look at how money has evolved. For millennia, people have used various forms of currency, from bartering goods to shells, and eventually coins and paper money. Now, we're living in an era where money is going digital. Cryptocurrencies, like Bitcoin, are being touted as the next logical step in this evolution. Unlike traditional cash issued by governments and controlled by banks, cryptocurrencies are decentralized, peer-to-peer, and independent of any central authority. It sounds revolutionary, but does it really make sense? Let's break it down simply. Cryptocurrencies are digital or virtual currencies that use cryptography to secure transactions. This makes them incredibly difficult to counterfeit or double spend. What makes cryptocurrencies like Bitcoin unique is that they operate on a technology called blockchain, essentially a distributed ledger that records all transactions across a network of computers. In other words, it's a record maintained by many, not by one central entity. The result? No bank is needed to verify your transactions. Everything is done transparently and securely by the network itself. But why is this such a big deal? Well, let's talk about trust. Traditional money relies on banks and governments to give it value. You trust that the paper in your pocket is worth something because the government says it is, and the bank guarantees your transactions. But what happens when people lose faith in these institutions? Whether it's a financial crisis, bank mismanagement, or government corruption, there have been plenty of instances where trust in financial institutions has crumbled. Cryptocurrencies are designed to be a trustless system, meaning they don't require you to put your faith in any central authority. Instead, the technology and the network itself are the guarantors. For some, cryptocurrencies represent financial freedom. Take El Zonte in El Salvador, now famously called Bitcoin Beach. The people there have been using Bitcoin to buy groceries, pay for school, and conduct everyday business, often without traditional banks. This community-driven movement offers a glimpse into what a decentralized financial system could look like, especially for the unbanked or those with poor access to financial services. In fact, over 1 billion people globally don't have access to banking services, but many have smartphones. Cryptocurrencies could potentially leapfrog these communities into the future of finance. However, it's not all sunshine and rainbows. Cryptocurrencies come with a significant downside: volatility. If you've paid attention to the news over the last few years, you've seen Bitcoin's value soar to unbelievable heights, only to plummet just as dramatically. In late 2021, Bitcoin hit an all-time high of over $60,000, only to lose more than half its value by mid-2022. For many, this instability is a red flag. How can a currency that fluctuates so wildly be used for everyday transactions? Imagine getting paid in Bitcoin, only to find out the next day that your paycheck is worth 30% less. It's a risk many aren't willing to take. And then there are the critics. The European Central Bank has called Bitcoin a speculative bubble, insisting that it's not a real currency, but more of a risky investment akin to gambling. For them, the idea of money existing outside government control is unthinkable. After all, one of a central bank's core responsibilities is to stabilize the currency's value and manage the economy. Bitcoin and other cryptocurrencies challenge this authority, making many traditional financial institutions uneasy. Warren Buffett, one of the world's most successful investors, has gone so far as to say he wouldn't take all the Bitcoin in the world, even for just $25. To him, it has no intrinsic value, unlike a company that produces goods or real estate that generates rent. But let's not ignore the other side of the coin. Bitcoin advocates argue that the cryptocurrency's limited supply is its strength. Unlike traditional money, which central banks can print at will, Bitcoin is capped at 21 million coins. This scarcity gives it a unique property. It's often compared to gold because of its deflationary nature. As long as demand exists, the limited supply could potentially make Bitcoin more valuable over time. In countries facing hyperinflation, like Venezuela or Zimbabwe, Bitcoin has provided a store of value when their national currencies became nearly worthless. In that context, Bitcoin wasn't just a speculative asset, it was a lifeline. Then there's the technology itself. Blockchain, the backbone of cryptocurrencies, is now being used far beyond digital currencies. Smart contracts, decentralized applications, and even digital identity verification are all being explored using blockchain. Many experts believe that while Bitcoin and other cryptocurrencies may face regulatory challenges, the blockchain technology underpinning them will continue to transform industries. In fact, major banks and corporations are already investing in blockchain projects to streamline processes, reduce fraud, and enhance data security. Of course, with innovation comes controversy. One of the most significant issues with cryptocurrencies is their association with illegal activities. The anonymity that Bitcoin provides has made it a preferred choice for transactions on the dark web, including drugs, illegal arms, and ransomware payments. This has led to a reputation problem for cryptocurrencies. Governments worldwide are grappling with how to regulate this space, balancing the need to prevent criminal activity while also encouraging technological innovation. Despite these challenges, we can't ignore the fact that cryptocurrencies have spurred a movement. They represent a shift in how we think about money, value, and ownership. Many people today see them as a hedge against inflation, a way to store value independently of government control. In places like the United States, more and more people are using cryptocurrencies for everyday purchases, and some companies, including Tesla, for a time, have accepted Bitcoin as payment. El Salvador even became the first country to adopt Bitcoin as legal tender, a move that made headlines worldwide. Yet, this raises an important question. Is cryptocurrency truly the future of money for everyone? Or is it a tool for a select group? Those willing to take risks and understand the technology. Let's be real. Cryptocurrencies aren't user-friendly. Setting up a digital wallet, managing security keys, and understanding how to safely transact require a level of technical literacy that many people just don't have. Compare that to the ease of using a bank account or a credit card, and it's easy to see why mass adoption is still a long way off. But things are changing. More companies are simplifying the process of buying, selling, and using cryptocurrencies. Platforms like Coinbase, Binance, and others make it easier than ever for regular people to enter the crypto space. At the same time, financial technology, or fintech, is working to merge traditional finance with the possibilities of blockchain. This could eventually make cryptocurrencies as easy to use as your debit card today. Let's not forget about the environmental impact, a massive talking point in the debate over cryptocurrency's future. Bitcoin mining. The process of validating transactions and generating new coins is notoriously energy intensive. At its peak, Bitcoin's energy consumption was comparable to that of a medium-sized country like the Netherlands. Critics argue that this kind of energy use is unsustainable, especially in the face of climate change. However, Bitcoin proponents argue that renewable energy sources are increasingly being used for mining, and that ultimately, the benefits of a decentralized currency outweigh its environmental costs. So, are cryptocurrencies the future of money? Well, that depends on who you ask. If you ask crypto enthusiasts, they'll tell you it's only a matter of time before Bitcoin becomes the new gold standard, a stable, decentralized form of currency that isn't subject to the whims of governments and central banks. Ask skeptics, and they'll tell you it's a bubble, a speculative asset that will eventually crash and burn, leaving millions in financial ruin. The reality likely lies somewhere in between. Cryptocurrencies have undeniably changed the financial landscape. They've forced governments, banks, and the broader public to rethink how we view money and value. The technology behind them, blockchain, has the potential to transform everything from finance to supply chain management to voting systems. But the path forward is uncertain, fraught with challenges and potential pitfalls. For now, cryptocurrencies remain a highly speculative asset. They represent an ideal, a vision of a financial system free from government control and traditional banking restrictions. Whether that ideal will become a reality for the mainstream is still up in the air. But one thing is clear. Cryptocurrencies aren't going anywhere, and their impact on our world is just beginning. So what do you think? Will cryptocurrencies become the dominant form of money, or will they remain on the fringes, a tool for the tech-savvy and risk-takers? If you enjoyed this exploration into the world of digital money, don't forget to like this video and subscribe to the channel for more thought-provoking content. And hey, if you have thoughts on this, drop them in the comments below. Let's get the conversation going. Are cryptocurrencies the future, or just a financial fad?